Hi everyone, it's Nick here from TraderLine with a short video on determining stop losses. For this video, I'm just going to show 4 quick examples just to kind of show you why we chose certain stop losses in each of the scenarios so you guys can understand our thought process and replicate it on your own. Alright, so first up we have VIRT. You can see that it trades very tightly. It's not a whippy stock. It doesn't trade whippy like some of the Chinese names that we know of. It trades very tightly. So you can see that it never goes below its 21 day and it practically rides its 10 day. So it wicks below the 10 day a few times, but it never breaks that 21 day. It breaks out, moves up, and consolidates again, never breaking that 21 day. So when we entered at 34.05, our stops are 32.95. 32.95 puts us right below the 21 day. So we're counting on this personality of the stock. It never breaks its 21 day. So if it does break its 21 day, that's going to be pretty significant and it will likely lose its momentum. So that's a thought process on VIRT. Now next up we have XCRA. So this one's from the newsletter. This one's a buy on a big volume move through 12. So you can see this area here that Ross has identified with a sell stop at its 21 DMA. So I just want to make it clear, this green one is the 10 day, this blue one is the 21, this gray one's the 65 exponential, and right here this purple is the 50 day, and then the yellow or gold is the 200 day. So stops below the 21 day. Right here the 10 day would be too tight. We see that it chopped back and forth above the 10 day, so the 21 day is the next support that we're going to use for this stock. It can slip below the 21 day intraday, and that's why position trades, we choose our stops on a closing basis. So if this is a position trade and it breaks below the 21 day and closes above it, then we're still in. And I'll show you that in the next example, why we do that. So next up we have Z. Z was a great trade. We were in it and rode it practically all the way up. But we did get rid of it due to market conditions. So Z is in the newsletter as well with 2 entries. The first one is you use 51 as a guide for entry with a sell stop at the 65 EMA. So you can see here the gray line as it comes back here. It really holds this pretty well. And it broke below the 65 here, but it closed above it. And then it never closed below the 65 since. So the 65 is a really, really good moving average. It's one that we use the most on stocks. You'll find that even when the 50-day doesn't catch a stock, the 65 EMA tends to hold it. And so it's a really good spot to identify a spot loss. So if we pull back to 51, the stop's going to be the 65. So pull back to 51 here. It has to be a constructive pullback, not high volume. And then your stop loss is going to be 65. So that's going to be a good reward to risk ratio. Now, if it does move up and it breaks its 21 day, 55.35, right here, that's the second entry right there. So we're not going to use the 65 EMA if we're entering all the way up here. We want to catch it more on momentum. So for that, the sell stop would be 53. So 53 is going to be right here. What that does is now we bought it above the 21 day. And so now it's got the 21 day of support. It's got the 10 day of support. And if it does move below the 10 day here, our stops are at 53. So we've got a bit of room to shake out. Last but not least, we have ATHM. So ATHM's on the newsletter as well. Buy it on a big volume move through 89.50, which it did go through this morning, but we are waiting for that follow through day, and volume was not too high when it did get through that price. So big volume move through 89.50 with a sell stop at 85. This is another good example. If we were to get in here earlier, you could see the 65 DMA right here. A lot of people use the 50 DMA as a stop. If you were to use the 50 DMA as a stop and you were in ATHM from over here and you're holding it, you would have been stopped out early March. The 65 and on a closing basis, so it shook out below the 65 and then it moved back up. So it closed above the 65. So the 65 is a great moving average for staying in stocks and keeping that momentum. So the 65 would be good if we were to enter in over here. That is what would be keeping us in. You see right here, and right here. It shakes out, but it holds that 65. So why are the stops then 85? 85 is going to put us right below the 10 day. The past few days, it's been held above that 10 day moving average. So when we're buying it through 89.50, we're looking for it to keep that momentum. We want it to hold that momentum. So our stops are going to be tighter here around 85 than they would be at the 65. You see it can bounce around a lot here without ever going through the 65, but we're trying to ride the momentum. So we're not going to let it fall all the way back to its 65, although that might keep you in the position longer. What we're looking for is it to stay above this 10-day. So the key takeaway is you want to see how the stock trades, its personality. Obviously, you can tell ATHM here is a lot different than the way that VIRT trades, so that you need to take that into account when you're choosing your stops. Another key takeaway would be you want to make sure that your stops make sense. If you're holding ATHM from the first breakout in December at around $60, then this is something that you would hold through, right? It's just moving sideways somewhat. It is making higher lows, higher highs, but it is consolidating. And so that is an instance where you would use the 65 EMA. You want to stay in the trade. You're waiting on the market. You're waiting on the stock. And so you want to stay in that trade. So the 65 would have kept you in the trade. Like how we pointed out before, broke below here, broke below here, broke below here, but it closed above it every single time. So you would still be in this trade and holding it for now when it makes its new breakout. Since we aren't holding it from its previous breakout, we just want to keep it on momentum. So if it loses its momentum and falls below that 10-day, like it's been holding up here, then that's why we would exit it early, because we don't have that good entry price from the first breakout in December. So I hope this kind of makes sense with the stops. You could see why we chose certain ones on certain positions in the newsletter, or if they were called out in the room. Everything basically goes down to the stock's personality. Does it respect its moving averages, and which moving averages does it respect? You want to pay attention to its personality around key moving averages, and you want to make sure that your stops are always defined within your risk. You don't want to take a trade if you cannot find good stops. You need everything to line up, everything to check out before you enter into that position. As you see in the weekly schedule, we've got a few more videos scheduled for this week. If there are any more questions on stops or any more specific things that you would like to know, then we can definitely make another video on stop losses. There's a few days this week that there are no videos scheduled, so I can use those days as well to explain stops a little more. So I hope this made sense, guys. I hope it helps. I hope you can see why we choose our stops. And I will see you in the next video. Have a fantastic rest of your day.